Hello everyone, welcome to Morning Briefing. I'm Andrea, and as we have seen yesterday, dollar got a bit on the very strong US data. We had consumer confidence climbing at 131.4 from 121.7 in January, so that helped dollar against the major currencies, but also the aftermath of a dovish message from Fed Chair Powell, which once again stated that the central bank's stance will be patience on the monetary policy, and on the growing optimism that we are the last few days we're seeing from the long-standing US-China trade disputes help dollar against all majors except yen and Kiwi. As we have seen over here, yen putting these spot returns on the majors. We can see over here dollar yen drifted lower. Yen was was having some gains against dollar. And this has to do with the Indian-Pakistan tensions, which seems to be escalating. So the yen is currently the leading gainer, and that follow the tensions, as I already said, because we have seen Pakistan actually shooting down two Indian aircrafts in the border. So the border tensions is adding some pressure to the risk of sentiment that we have seen so far this week due to the optimism from the US trade talks. So risk off takes a grip. I mean, niggling US-China concerns, and that has to do with the Indian-Pakistan tensions. So let me put the platform back. As we have seen, a long downtrend from dollar yen down to 110.31. So pretty much the next, let me zoom out, the next support for the pair stands around here at the bottom, which was found at the mid of February, 15th of February, down to 110.23.20, just few pips, just 20 pips lower. That's the next support area. But also another mover from yesterday was, of course, Aussie. We have seen, so let me shift it back, Aussie, 1 hour chart, Aussie was like retraced from 0.72 area, lower, currently at 171.78, and that has to do with the strong, of course, data, but the dismal Aussie data. So we have seen some disappointing Aussie data, some disappointing construction data for the fourth quarter of 2018, which added pressure to the asset. However, it still has a support at around 0.7174. So the growing optimism that we have from the trade talks are looking to support our Australian dollar, our assets. So as long as the pair is holding around, it doesn't break and confirm a break of this area, but more precisely, let's shift it further down. Let me put the 4 hour chart. So yeah, here is the 9 moving average. So unless we don't see a confirmed break of 0.7170 area, we don't expect to move further to the downside. But if that breaks, then the next support stands at the 200 period moving average in this hour, in 4 hour chart, which is 1, 2, 3, 4, 5 consecutive 4 hour candle support. So that is around here, 71.45. So that's for Aussie. It is supported by the optimism of US trade talks, as I said, despite the disappointing construction data. Let's move on, and let's go to the pound, of course. So we have seen pound actually spiking higher, rally to 1.3280, and that had to do with the with the news that Brexit may be possibly be delayed by May. So May actually has put three options on the table, as we have seen yesterday. So that rally that push pound higher and not 1.3280. However, we have seen pound gaining, meeting a pause, spiking quite lower in the near-term picture down to 132.32, but is gaining some gain in the European Open. So the last 2 hours seems to push the pound higher. So we might see a return of yesterday's highs or even higher. Let me see. Okay. Oh, this is a daily chart, and the next resistance is at 131.87, just a few pips higher. But the next one, let me put the weekly chart because this is quite messy. So if that breaks, it was heated again back in September, October, the next resistance is at this high, 133.63. Pound seems to be, it was down, but not out. Definitely, its return on this Brexit concerns and this Brexit news. So again, pound in focus again today, and until the 12th of March, when we will see again the voting from Parliament. So it's a wait and see stance. So US oil, on the other hand, the last asset I'm gonna cover, is consolidating currently at 55.80 area after the 3% Trump tweet induced route. So, and also we have seen South Oil Minister saying that is the likelihood of output cuts extension. So he pointed out that they need to continue to moderate oil production for the second half of 2019, and that oil is responding to output cuts, of course. That's why we have seen it spiking up to 56, unable to break this barrier, return back lower again, and it's currently in a ranking market, in the consolidation mode. So we are waiting insistence, but for sure the immediate support is over here at the latest low 55.76, and the immediate resistance at the round 56 area. So on the break of this area to the upside, the next immediate resistance at 56.30, and the next one at the round 57 area. Support, on the break of this immediate support, the next real support stands, this is also the 20 period moving average in the 1 hour chart. So the next support for me is down here, over here, 3 consecutive low fractals, 55.24. So that was it for me so far. Thank you for watching. Have a great trading day. See you later. Bye bye.